track, IT. And what we've done is that since you were coming, my producer anticipated this question, and she's brilliantly looked at the 5-year averages for large cap IT stocks, just for our reference for our viewers. So Nilesh, I'll split the IT space right in the center. Bread and butter business and the AI challenge. The bread and butter business is a function of US economy. AI is something which no one knows. Analyze the big picture for us. Post-COVID, the sugar rush is over, but AI disruption is real. What is the best way of looking at IT now?
So Nikunj, the way I look at IT, and I'll probably slightly cast a more long-term perspective. I think the big boys in IT, I think they are great capital efficient companies, but they're going to be relatively moderate in terms of their growth rates.
Okay.
No matter how great the opportunity
is. The size has become large for them.
Their size has become so big that I think it's going to be hard for them to kind of grow in double digits. Even if you look at, say, an Infosys or a TCS, the last 10 years, and in last 10 years, so much of technological advancement has happened, they have grown at probably 10, at best maybe 12% in terms of the revenues and maybe 13-14% in terms of earnings. Now that's not bad, it's good, but they're not necessarily those hyper growth stocks. They're brilliant in terms of capital efficiency. They will sustain a 25% margin, they'll have 25% ROE, so that's great. So it's always great to buy them around towards the lower end of the valuation range.
Are we there yet?
I think we were there in early April when, say, a stock like Infosys went to about 21 times trailing earnings. I probably think that close to 20, 21 times is a very good floor for a stock like this or a company like this. I think you're better off just, following this principle that these are essentially, they have demonstrated the power of scale.
Yeah.
Okay. But beyond a point, scale doesn't deliver growth because the scale itself becomes your own enemy or your own challenge. And I think that's where really the big boys are in. Obviously, if you're running an index strategy, a large cap strategy, it's a good place to be. Then we went on to the power of specialization. There were a lot of companies, like say a Tata LXC,
which did very well.
Which did very well.
What
the power
20x?
You know what, Nikunj? It's actually over 10 years been 100x.
Yeah. Wow.
If you were having this discussion in 2013 and you had two options, and why I'm bringing this up is because today NVIDIA is so much celebrated.
Yes.
In 2013, if you had put your money in, and you didn't know what NVIDIA was,
yes.
At least let me be honest, I didn't know what NVIDIA was, but I knew what Tata LXC was. Outcome in 10 years has almost been the same.
Wow.
From the bottom to the peak. And this I'm saying is when Tata LXC was at 10,000 rupees, 1.5 years back. Maybe
and Tata LXC was never the top stock recall name for anybody.
Absolutely.
2000 to 2015, it never did anything great.
Yes.
It was a Tata Group company, but always disappointed.
Yes. But it ended up, so if you look at it, Tata LXC sometime in 2013 was actually at 100 rupees. And sometime in late 21 and 22, it went to 10,000 rupees.
What price did you look at?
We'll not get into that. I'll stay away from that. But I'm just trying to confirm, but that was the power of specialization.
Yeah. Okay, fair point. It's a great point.
I think from there, we've moved on into the world of the power of products.
Okay.
Where a lot of the SaaS-oriented companies or companies which were very focused on specialized areas. You could be a SaaS provider in the travel hospitality vertical, or you could be a SaaS or a products company in banking, financial services. I think it's important to look at that part. It's great to look at, I think, some of the platform companies who are using technology to grow, or look for companies which are deep tech companies.
What is deep tech?
I think where you have developed so many strong competencies which are very hard for anybody else to create and have a very wide-ranging applications.
Which company qualifies the cut?
So currently, one company that we've just recently invested in, we own it, is essentially MapMyIndia C Infosystems, which went public, I think, a year and a half back.
But they've had a volatile delivery record.
Not really. And that's always a challenge, that a service company can deliver to you quarter-on-quarter performance.
Yes.
But a product company may not be able to deliver you quarter-on-quarter performance.
We're not used to tracking it that way, so markets tend to get nervous.
Correct. So you have to, I think we all have to come to reality that IT services is one thing and products, SaaS and deep tech is another thing.
But globally, Nilesh, SaaS companies have also come down.